Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
Last Monday, I proposed that U.S. stocks, fighting strong against European debt fears, would eventually become exhausted with no new concrete solutions from the ECB or anybody over there. And exhaustion is exactly what we got as the S&P broke down below 1225. Well, this morning, we find that the not-so-super committee is giving us some new things to worry about. We've cracked through the 50-day moving average and taken out support at 1,200. Here to talk about it, Kevin Matris and Tracy Reineck. All right, Kevin, so let's deal with the patient that's just been readmitted to the ER here.
Right, that's us, right?
The S&P 500 in this case. We took out 1,200. Path of least resistance downward. What are your targets?
Well, I mean, this is the path of least resistance. We're seeing it play out right now, but we are in this big, massive range. So you have the high of October of 1250. You have the low of October of 1074. We are right now right in the middle of this range. However, though, let me just say, there really are two sides to this story. There is a bull side and a bear side. So the bull side is this, even though it seems absurd right now. The bull side is this. The U.S. economy is gaining strength, so much so that so many analysts are starting to increase their fourth quarter GDP estimates to over 3%. If we see the GDP estimates come in over 3%, that could literally be the fastest growth rate we have seen in 1.5 years.
And I agree with you 100%. Right. That's where I've been, but Europe...
Right, so that's the downside. The downside is this never-ending European debt crisis. You have this epic fail from the super committee.
Our best minds.
Right, so the fact of the matter is, if we can see the market stabilize, there is a possibility that you could see the bullishness overtake the bearishness. The upside targets are 13 and then 1350, which is a 10% gain from here. However, the October lows of 1074 seem to be acting as a magnet, and until our political leaders can get enough courage to do the right thing, not just here in the U.S., but also overseas, it looks as if the path of least resistance is going to be to the downside. It's being dragged down to 1074. That is 10% lower from here.
I see support at 1150. We'll see. All right, Tracy, let's talk about Europe. So the ECB is in this conundrum, right? Yes. I called it the prisoner's dilemma, credibility or face systemic banking meltdown.
Right.
Should they get a printing press and solve this crisis?
Well, they can't, because under their mandate, they would have to change the treaty. And that would have to go through all the member states. It would take forever. They could violate the rule of law and just say, we're doing this. But a lot of the member states don't want to do that. And I'm still one of the ones who believe that they will follow the rule of law and actually try to either amend the treaty or I don't know what. I don't know what the end game is going to be. But, I mean, a treaty is a treaty. They're not just going to violate it.
So, in the meantime, do the bond vigilantes keep pushing Italian yields higher and force the ECB to do something much bigger?
Well, that's definitely a possibility, that they're going to have to move faster. And I don't know if they can get all these member states, because you're talking about all these different countries, to move fast enough to get in there to try to stem the crisis. I think it's already too late. They should have been amending it months ago.
All right, Kevin, should they get a printing press?
Yes, they have to. They have to save themselves. Everybody's talking about the ECB credibility. They're going to blow their credibility if they start printing money. They are going to blow their credibility if they allow the euro to explode. The only way out of look, Italy and Spain, they're not going to fix themselves. The only way out of this mess is for the ECB to create the euro bonds. That is going to be their salvation. The fact of the matter is they will increase their credibility by saving the entire euro, and they will save themselves.
Yeah, credibility is one thing, but when you put tens of millions of people out of work and go into a depression, where's your credibility, right?
When you have no banks left, tell me about your credibility.
All right, we're going to come back in another segment and talk about the super committee debacle.